So the purpose of this call is to discuss if you're doing bookkeeping or accounting, what you have to do in a attorney's practice can be different to the kinds of things that you do in other types of businesses, such as contractors and e-commerce stores and so on, right? Are we all on the same page on that?
Yeah.
And following our last conversation, for the sake of our discussion, we're using the term bookkeeping to denote day-to-day tracking of costs and charges and things that go in the books. And we're talking about accounting as being a more analytical aspect of making sure that are things going in the right places and are things being done in the best way for the business, right? So just to get those, so we don't circle around on those two definitions again. So we all good with that?
Mm-hmm. Yeah.
If I understand this document you put together, Linda, you've focused on one aspect of the work that an attorney does, specifically drilling in on trust work, which is not something necessarily every attorney does, because it's like Andy, in corporation attorney, he sets businesses up, which would have nothing to do with trusts.
No, it's you're missing.
Am I missing?
Yes, it's not. It's when a client pays the lawyer a retainer, that money has to go into a trust, and that's what it's talking about. IOTA talks about the commingling of funds. So if one client gives him 4,000, another client gives him 2,000, another client gives him 7, rather than opening an account for each of them, he can put it into one account, and it's a trust account that he's putting it into. So it's not a trust like our joint revocable trust, which is a different kind. This is a trust banking account, is a good way of putting it, I guess.
Is that how you are seeing it as well, Linda?
Yeah, I was just waiting for you to finish, and I was going to correct you on that. It's not that they're working on a trust as a type of document or some legal matter. It's the trust account is a type of bank account.
Yeah.
Well, Son, I'm glad you're here. So, okay, so I have some immediate questions just to make sure we're clear on what it is we're talking about. What you seem to be saying is that when an attorney, that client is going to pay him some money, so he has to open a separate trust for every single client?
No, that's where the joint part comes in. So he can have one bank account called a trust, and for every client, that can go into that one account. The reason this IOTA thing came up, because back at the end of the 70s, no checking account got interest. So the government opened up checking accounts to be able to pay interest. But the legalities came with, well, what does a lawyer do when he's got an account with all these different people's funds in it? Who gets the interest on that? So IOTA was created so that when you have an account with lots of different clients' money in it, it can earn interest, but IOTA gets the money and it goes off to pay for charities, right?
Well, again, so this is something that I'm fundamentally not understanding. So, Linda, do you agree with that, with what Sonia's saying there?
Yeah, that's correct. There are two types of trust accounts. One is an IOTA, and then the other one is just an attorney's trust account, and that doesn't incur interest. You don't get interest. That's a non-interest bearing trust account for an attorney.
So I'm clearly missing something fundamental here, because I'm not understanding why is it if a client pays an attorney to do some work for them, it goes in a trust, but if a client asks us to do some marketing work for them, it just goes in our bank account.
Okay.
How is it different?
How is it different? The problem is a lawyer cannot get paid until the work is done, right? And it's got to be actually proved to have been done. But you always pay an attorney up front. You give them a retainer, right? So that means that you give them $3,000. They then do 4 hours worth of work at $100 an hour. It's $400. So they can't just go into that account and pull it out. They've got to send off documents to the client. The client's got to say, yes, I will pay that. They can then take the $400 out of the account. So the reason there's so many rules around it is because there's a lot of clients' money in that one pot. And sometimes some lawyers will owe money. They'll owe a big amount of money for whatever. I don't know, maybe they need it to do the roof on the building they own. But they can't just decide, okay, you are going to owe me $4,000, therefore I'm going to take that $4,000 out of that pot, because he hasn't earned all of that $4,000 yet. So that's some of the rules that are surround how you can take money out of that account.
Linda, do you want to add anything to that?
Well, it's similar. This might help you for the analogy. When you have a contractor, like the California contractor that I work with, he goes out and he does this construction work in homes. Well, because that is such a large amount of money and you have all these materials he has to buy up front, he collects a 50% down payment from a client. And the same situation there with the construction is that you don't want that to go into your income. You haven't earned it yet, and you don't have any billing to go against that for your expenses. So that basically doesn't sit on your financial statements as income until you start to earn that money and you start that project and you start doing the work. It's similar for an attorney in that they want to collect that money up front from a client because they could be working on something, a legal matter that's going to be $5,000 or $6,000 for all the work they're doing. They want money up front too. So when they take that money up front, the difference in a construction company and an attorney is the American Bar Association has strict rules for attorneys collecting money up front than they do for a construction company collecting money up front. The American Bar Association says you need to put that money in the trust, and we have set guidelines of what you can do with that money and how that money is handled and when and how you can take that out of the trust account and put it into your regular bank account and consider that to be income.
Yeah.
Does that make a little more sense?
Yeah, so what you're saying then is that attorneys are treated very differently from a different type of business in terms of when they get paid. They can't make use of that money that they get paid until at some point in the future when there's some kind of definition around the work being completed.
Yeah, so when they've done certain billable hours and they can create an invoice saying I have done 4 hours worth of work, for instance, and if the client says yes, well, right, we'll pay that, then they can draw the money and put it into their operating. But they can't just take the money out of, so this is like one of the laws, right? So the money's in this trust account, commingled, they're owed $400, the client's saying, yes, you can have $400, but they can't just go in and say, okay, we're going to take out $400 in cash. It's got to be transferred to their business banking account, the firm's business banking account. Then it can be sent off to be paid for a bill or something. So the rules are really strict. They can't even just take it out and use it. It's got to show it went into their operation.
So it's not that all the work has to be completed.
No.
It's that what they're charging for has to be shown to have been done.
Right.
So it could be an hour of work.
Yes.
So they charge up front for an hour of work, whatever the $300 or $400 or whatever they charge.
The client's happy with that, yeah.
And then they say, okay, well, we've done the hour of work. They can now draw that money.
Right.
So, Linda, anything to add to that?
Right. And then, you have to invoice the client. You have to show them what they have in retainer funds, and then show the work that you've done. You itemize on the description what you did. I had a 2-hour meeting with you, and that was at, $200 an hour. So that's $400, and that's their invoices for $400. If they're okay with that, then you can take the $400 from their retainer.
So what you're saying then is that the client actually has to approve the money being taken from that trust before they can remove it. There's actually an approval process?
Yeah, they say the bill can be paid. They don't know. I mean, as a client, you don't know the money's in this commingled trust account. All they know is I paid you. I've given you a $6,000, $7,000 retainer. So yes, you can use part of the retainer to pay this bill. Basically, that's.
So if you were an attorney and you charge somebody $400 for an hour's work, and you said, yeah, I've done the 4 hours work. I went online, I did some research. they then send an email to the client and the client doesn't reply, they can't take the money out the trust.
Right. Yes, they have to have. Yeah.
Is that accurate, Linda?
Yeah, you're not supposed to take the money out of the trust if you've invoiced the client and they don't respond to you, that it's okay.
That's interesting because clients are often unresponsive, right?
Do you know what? I was reading about this, and it's like 80 lawyers get 80, I think it's like 84 or 86 something, some strange number, 80 something percent of their money that they're owed. They never get the 100%. They're all shorted. Well, they're shorted. The client either doesn't pay it, or they only gave like $6,000, but the whole thing cost $6,500. And so they do the last invoice, but then the guy never pays for the last amount. And it's amazing how much. And some of it is done because the bookkeeping is not done properly. So they don't do the invoicing properly, or they don't track what's in the account properly. So, but yeah, lawyers are frequently shorted. Yeah.
Well, the biggest problem with the 86% is all they collect is because just like an employee has to send their timesheet into their employer, these are my hours for last week, and that's how you know what you're going to pay them for hours this week. Attorneys have to do the same thing. They have to keep track of that billing. They have to keep track of everything they're working on, when they're working on it, how long they worked on it. You know, they could be sitting at their desk and working on 2 or 3 clients. They have to keep very diligent records on, okay, I spent half an hour on this client and then I switched and started working on this client. They have to keep track of those billable hours. That's the only way an attorney gets paid, is through, especially if they've taken a retainer, they have to keep track of those billable hours, and they don't do a very good job with that. So then the money is sitting in there in the retainer. They've done the work, but they forgot to track that they worked on Joe Smith's matter for an hour and a half last week. They forgot that they did that, and they didn't turn that in. So the client, they didn't tell the bookkeeper to invoice the client, so the client's not invoiced. The hour and a half just goes by the wayside.
Presumably it'd be very easy though to just say, yeah, I spent an hour and a half on research.
Did you watch, I think it's the movie Jerry Maguire, and they said you bill them for, even if you're just thinking about it, you bill them for it.
Yeah. Well, yeah. So, I mean, it seems to me it would be very easy to retrofit it, because you would just say, yeah, I worked an hour and a half.
Yeah, but they don't.
How would anybody know?
Yeah, well, they don't, because they're lawyers and they've got a fiduciary responsibility to not make shit up.
Right. But they do have to keep track of that stuff. And I do know, working with those 2 attorneys, they are very busy, and trying to get billing from them was just like pulling teeth.
Did you ever address it retrospectively, like I just suggested, where they say, look, you've got an hour and a half gap here, and they just say, yeah, I was working on it then?
I don't get like a timesheet of what they did, 8 hours every day, and it's okay, you've got a gap in here. What were you working on?
There's no way to actually know one way or the other, because you can't, I assume, unless I'm missing something, you can't actually check to see whether they actually did that or not. It's just what they said they did.
Right.
So it's an interesting system that's geared to filling stuff in.
Well, that was what Jerry Maguire was all about.
Yeah. All right. So then, in summary, then, in our business, we charge our clients up front. So we charge them at the beginning of the month, and then we do work for them during the course of the month. But there's no law that requires us to justify exactly what we did, or on a time basis, before we can realize those funds. But an attorney's practice is subject to different laws. So have I understood all that correctly?
Yeah, that's correct. Now, that's not for all of their legal work. That's only for things that they take retainers on.
Yeah, that's basically the trust part of it.
All right. So can you clarify for me, when you use the word retainer, the context on that? When does it apply and when doesn't it apply? Can you be any more specific on that?
It would apply, like, let's say, for instance, you were going to have a trust done. Trusts are pretty involved, and it's a lot of time for the attorney to work on that. So maybe for a trust, they would do that. For a divorce, because that that can go for months and months and months, and especially if they have children. Those are domestic matters. Those are pretty lengthy, and you wouldn't even know what to charge for that. You would just have to do retainers, and as the retainer was gone, you'd get another retainer. If you had an attorney that did criminal things, similar situation, you wouldn't know where that was going to end up. You'd need a retainer. Those kind of things. If you sued a doctor, a lawsuit type of thing where you were going to get a settlement, that would be another one you would have to use the trust account for.
So this sounds like it's very geared to litigation type activity where you're paying a lawyer or a retainer to represent you in some way. And you know, there's a whole range of activities that go into that from the point of view of research, creating documents, through to ultimately possibly going to some kind of court proceedings.
Yeah, Rachel, when Rachel got divorced, she had to have a retainer. She gave him, I can't remember how much it was, a couple of grand, 3 grand, something like that, before he would even start to work on the case. Because they don't want to wait until the end, because they finally got you your divorce, and then you're like, yeah, sorry, I got no money now. What are you going to do?
Yeah.
So, yeah, certain things, they want the money up front. Now, they can't take the money.
No, it goes
They
into
can't
the trust.
use it. It's got to go in the trust, and they can only use it as they earn it. But yeah.
Let's say you were going in and you were just going to have wills prepared. You would sit down and meet with the attorney and, you know, give them all the information and everything. They would prepare those documents. And then when you came in to sign, you would pay. They have done work prior to that. So if you never come in and sign, they've kind of lost out. But they don't take retainers for things like that. But then when you come in to sign, if you want your documents, then you have to pay at the time that you sign your documents and you get your will and your power of attorney and stuff like that.
We got our wills. We never actually saw the lawyer. Everything was done online, but we got drafts. And we were not going to be able to get the final document until we'd paid for the wills. And that.
So if a CPA firm does work for a client, do they have to do the same thing, or are the rules different for a CPA firm?
I don't believe so. The only entity type that I know of that has such strict rules is for attorneys, and that's made up from the American Bar Association that says this is how it has to be.
Right. Okay. Well, that's an interesting learning exercise for me. I never knew that. All right. So having established that the attorneys are subject to quite different rules, where the money for a retainer for work that they do goes into a trust, and then they essentially draw it off as they do the work, providing the client approves that money is drawn, right? I've summarized that correctly.
Yeah.
Linda's experience is great because her experience is based on actually working in an attorney practice, right? Right, Linda?
Yeah, and the difference was he was just, you know, one attorney, and then there was a second attorney. So it was kind of a sole proprietor business. If you got into some of maybe the bigger law firms, they would have accounting departments. This person would have a bookkeeper that did the bookkeeping and somebody else does payables. A larger firm would probably be more apt to have an outsourced person.
In the work that you did for the attorney, what type of an attorney were they? What sort of work did they do typically?
The attorney that I worked with did probate. He did probate matters. And then the other attorney, she did domestic work, which was child custody, divorces, you know, things like that. She did domestic. So I got to see both sides of that.
Was it like litigation, or was it something different to that? Was it somebody trying to get custody of their child? What type of work specifically was it?
Domestic is like if you want to get a divorce, a dissolution, you're fighting for custody. Litigation is like if you're going to sue somebody. That's a different kind of practice altogether.
The whole process of getting a divorce, she's helping her client through, right the way through to litigation over something that's contested. Have I understood it correctly?
Yes, she's helping a client get her divorce if it's contested or whatever, or through child support, all of that.
Right. What's probate? Help me understand what type of work that is.
Probate is like guardianships. If your parent is no longer able to make decisions for themselves and you have to get a legal guardianship for someone that's not competent any longer. Or probate is also estates. If someone passes away and you have to open up the estate and manage all of the estate process through the end.
Between the two of them, then it's quite a diverse range of different types of activities.
Yeah, because John did basically, the attorney that I was hired by, he did probate. So he did all of that type of work. And then when Erin came on board, she did the domestic, which was completely different type of legal matters.
Okay, so from a bookkeeping point of view, was the work that had to be done different for the two different types of work?
Yeah. In terms of bookkeeping, the probate really didn't have too much in the way of retainers, which had to go into the trust accounts. Those type of things usually just paid for at the time. And then on estates, you're paid when the estate is complete. You don't take retainers on estates either. Probate matters you don't do retainers for. On domestic, almost all of the domestic was all retainer based. On the probate side, it would be very similar to just the regular bookkeeping you would do for anyone else. You just do the work, whatever it is, but the work is prepared, and then you invoice the client, along with their documents. When they come in to sign, they pay their invoice, and then you just receive the payment and put the money in the bank. So that's very similar to just regular bookkeeping processes. You invoice a client, you receive the money, that's that. Those transactions are the same. When it comes to domestic, that is where it's very different. You may receive that retainer, but then you have to set up clients. So you've got a client, kind of like a construction company has jobs. You have customers and then you have jobs. So you would set up that same thing, a customer, and then their job would be their matter. What matter is it? Because you could have that same client come in and they could be coming in for a divorce one time, and then that same client come back to you for, now I want to go for child custody, and it's a completely different matter with a different case number. So you would have to set that up. Secondly, when they do the retainer, you would have to take that money in the retainer and put that into QuickBooks. It goes in a different way because it's a client retainer. Then the billing, the attorney has to give you this detailed billing, and then you apply that billing to their retainer. You create that invoice, and then you send the invoice out to the client, and then you record that against their retainer, and then you take the money out of the IOLTA account and put it into the regular account. So it's just a lot more steps.
Okay. In this conversation, you're talking about QuickBooks, which means, in my mind, what you're saying is an attorney for managing their business is just as likely to use QuickBooks. It's just as appropriate for them for bookkeeping as for any other type of client.
Right.
Is there any specific functions in QuickBooks that would be specific to an attorney? Or is QuickBooks more sort of just generic and anybody can use it for anything?
QuickBooks is pretty generic, and any type of business can use it for their accounting purposes. Most attorneys will use a legal software, though. They will use legal software because they have clients and they have matters. It's just so much more involved when you start getting into clients and their documents and all this kind of stuff. So it's an easier way to manage your clients, to use a legal software to manage your clients. And they'll usually pick one that will then integrate with QuickBooks for some of the accounting part of it. But then there's some legal software that also has the accounting built into it.
Right, so you're saying sometimes they won't use QuickBooks, they'll use a specific legal software that will include the accounting. So QuickBooks is not needed.
Right.
Right, but sometimes it is, and it will integrate with it.
Mm-hmm. Well, there's one that I had used, which was called Abacus. Well, there is one other thing that's kind of a pitfall when it comes to that trust account that is a huge problem for attorneys if they don't have a bookkeeper that's keeping track of that trust account when they're entering these transactions, is that, let's say a client gives you $5,000 retainer, and now you've billed them, you've got $3,500, and then now you've got another $2,700. Well, if you go ahead and just take the $2,700 out of there, that's more than what that client had in retainer funds. So what you've essentially done by doing that, just taking that from the trust account and not paying attention to how much they had and their current balance, now what you've done is you've taken funds that belong to another client.
Yeah, that's what I was alluding to at the beginning, when, you got to be really careful to make sure you track what comes out so you don't take. Yeah.
And the consequence of that is
pretty rotten for the attorney. I mean, that's serious for the attorney, because you've taken funds from another client that didn't belong to you. First of all, you haven't earned it, and second, it wasn't even their funds. You took another client's funds and paid yourself for another client because you didn't track your account.
Yeah.
So you've basically got to make sure that you only take out that which is directly funded by the client.
Mm-hmm.
Yeah, you definitely have to keep track of those funds, what a client has in there for retainer funds. You've got to pay attention to that before you go writing a check out of the IOLTA account, because you can just go in QuickBooks and create a check. Okay, I just invoiced this client for $2,700. Okay, and they're okay with paying that. So, okay, I'm just going to go create a check and print it off from QuickBooks and have the attorney sign it. I'm going to go deposit that. That's great. We need the money this week. Not realizing if you went and looked at, you needed to look and see what that client had in funds left. They may not have $2,700 left. But it doesn't prevent the bookkeeper from going in and creating a check for $2,700 for that client out of the trust account, because the trust account does have $2,700 in it. Doesn't mean it belongs to that client, but there is $2,700 in that account.
An attorney has unique challenges with their bookkeeping. These are the kind of challenges they have. This is something we're experienced in doing. Work with a bookkeeper that understands the unique challenges of an attorney.
I do have that experience, and I worked with him for 15 years. So I have experience with legal work.